Welcome to the weekly deal analysis here in the Corner Barn. Each week, I pick a random house off of the internet, analyze it for a cash deal and a creative deal. How you doing? I'm Chris Thompson, that bearded guy, the creative guy. We're going to break some deals down. Let's get into it. All right, so here is the property that I just pulled up. It is 927 Davies Ave in Akron, Ohio. It is listed for $100,000. It is a 3-bedroom, 1-bath house. Let's see what we think this thing's truly worth. Let's take a look at the pictures. Not a big fan of the purple door, but outside of that, this thing's pretty clean. And only been on the market about 12 days. So it looks like it has been rented for $725 for quite a while now, actually. Personally, I think that's below market, and I'll show you why later. So we know what they used to rent it for. We know what they're selling it for, or at least asking for. Property taxes, $1,433, pretty in line. This calculation is if you're putting 20% down, and we're not going to use those numbers. I always like to come down here just to kind of gauge, what's going on in the area. So we got a 117, a 133, a 99, 93. Overall, this thing is at market price. But we're investors, so we don't pay market price. All right, so let's come analyze this thing. I like to use the InvestNest. It's a local company here to me in Maryland, and I just like the software. It's super simple, and it's really not expensive at all. I think it's like 15 bucks a month. If you do like the software and you want to sign up for it, you get a free week trial. You don't even have to put a credit card in. And if you use code Chris Thompson Real Estate at checkout, I think it brings it down to like $7. You get 50% off your first month. So if you like it, great, use it. If not, use what you're using. So I got the property pulled up here. They're estimating the value of 87, which is really just based off of the tax assessment value. Rents, as you can see, I think they're even a little bit higher, but they're estimating market rent at over $1,000. This owner was only renting for $750. So I don't know. One of the coolest things, they do skip tracing for free. They don't charge extra for it. So I could skip trace, get this seller's info, give them a shout. So let's analyze the deal. So we're going to call this 927 Davies Ave. Our purchase price, we're investors, so because of the condition, I'll go at 70% of ARV. Because it's 100,000, we're just going to offer them $70,000. If we're doing hard money, which most people are, 2 points on the front side for closing costs and 2 points on the lender charge. Putting down 25%, 17,500, mortgage balance and all of that stuff. Interest rate is about 7, which is pretty fair for right now. Overall, I think they're in the mid 7s as of today. So we'll kick that up to 7.5. And we definitely want to extend out to 30 years. Rental price, this is what the market's saying. I always like to check HUD fair market values. So this one, they go by zip code, 3 bedrooms. So efficiency 1, 2, 3 bedroom, 1320. Now you're generally not going to get 1320 from Section 8, but I always knock off about $100 to $150. So this one, we'll kind of split the middle. We're going to knock off $120. So we're going to call our rent $1,200. Property taxes brings that in. Insurance, $100 a year on something like this seems pretty reasonable. Management fee, national average is 10%, so $120 a month. Utilities, our tenant's going to pay, so I don't pay attention to that. Maintenance, repairs, vacancy, and CapEx. I hold 5% for each of these because of the condition of the property. And if I'm a new buyer of it, then I don't really have to worry about vacancies. So I plan for the future on that. So I'm only holding back a little. You could adjust it to fit year model. Appreciation rate 2%. We're going to plan to hold this thing for 10 years. I am an agent, and it's rare when you see 6% anymore. So we're going to knock that down to 5%. So this breaks everything down for us very clearly right here. So here's our monthly cash flow. If we can get that 1,200, the cash invested is just shy of $20,000. Our mortgage payment with our rate, purchase price, annual income about 14. It's a good return. So our return on investment is 28%. That's pretty on fire. So our total cash needed is just under 20. And here breaks down all of our analysis. And then our CapEx expenditures over here, CapEx vacancy and repairs. So ultimately, we're looking at almost a 19% cash on cash return. That's freaking awesome. Now, obviously, the seller would have to agree to sell it for that cheap, but that's part of the game. All right, so that's how you break down a cash deal. Now, let's go break down a creative deal. We're just going to run this one seller finance because I don't have the mortgage information, or honestly, I don't even know if this guy has a mortgage, but let's break down some simple terms. This is the calculator I use. It's on my website, christhompsonteam.com. Go there, download it for free, use it, love it. I use it all the time. So we know the ARV is $100,000. On a creative deal, I'm coming in 10 to 15% below what they're asking just to see what I can get away with. So we're going to offer them $85,000. We're also going to offer them a 4.5% interest rate. And then to find the PITI, or principal, interest, taxes, and insurance, I like to use bank rate. Super simple. It's free. You get this stuff done in no time. So our purchase price is $85,000. We're going to try to get away with 8% down, which is only $6,800. 30-year loan. More than likely, we'll have to balloon that out, but that's a conversation for another day. 4.5% rate, our zip code. Got to have a good credit score to get a good rate. 120 on taxes, 100 on insurance, and that's going to give us our $616 payment. Pretty darn good. So from there, we come plug that in. We know from our HUD site that we're going to estimate about $1,200 a month in rents. And that's just our, potential rent number. Subtract your PITI from your potential rents, and you're going to come up with $584 in your gross cash. We're going to hold $183 in that war chest, and that's these figures right here: repairs, maintenance, CapEx. CapEx is just building maintenance, essentially. Roof, utilities, HVAC, stuff like that. You basically have to plan for when that stuff breaks, so you're not having to dig into your profits each month. So you just put a little bit aside each month, and when something happens, because it's going to happen, your money's already there, and you don't tap into your operating account. Management, $120, 10%, which is going to give you a net cash flow of $281. Pretty good return. Cash to the seller, $6,800 down. Agent, this one is on the market. We're going to try to offer them 4%. More than likely, they got a 5% listing sign. So we're the ones solving the problem here. So we'll try to skate with that. 2% on your closing costs. Really doesn't look like it needs much in renovation, but I'm going to throw $5,000 in just as a buffer. For just the appliances, you could probably get away with $1,000 to $1,500. 2 months of holding costs, there are no arrears, and a good transaction coordinator is going to cost you about $1,000. So that brings our grand total just over $19,000. With these figures, you're going to have all your money back out in 5.5 years. So that is how you break down a cash and a creative deal. I'm going to be back each week dropping a new one of these, random house off the internet, for a cash and a creative price. Thanks for watching. We'll see you next time.